As you guys know, I don't have a sponsor on this podcast, but today the game has changed. I have recently invested in new technology that I believe can change the game for small and medium sized scrap companies like us. Its name is Nikki, and it's the last receptionist your scrapyard will ever need. I just got tired of our company missing opportunities that were coming across the phone lines at all of our yards, calls that we were paying for through advertising. The problem was we were asking our scale operators to just do too much, but we couldn't really justify the payroll to have one person just sitting there answering phone calls. Now Nikki answers the calls, directs the important ones to our buyers, and answers the basic questions right now. More importantly, Nikki doesn't let big opportunities slip through the cracks while our team is taking care of the scale traffic and our customers. And probably the most important feature is the daily data call log for follow-ups, tracking, and details of every single call. More details coming soon. Stay tuned.
Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
All right, we took a month sabbatical. Not really, because I know Aldo was working. He was doing his thing down in Vegas at REMA. We were just talking about that. I'm back with the trade. This time we're talking about copper. And man, what a ride! What a ride it's been on. And we took last month off, but I think everybody was busy, trying to get some business done, get to Vegas, get that out of our way, and get back to the day-to-day grind. And summer's gonna be here and upon us. And man, if it's hot outside, and so is the copper market this morning at 6:30. So who better to break it down than Aldo Jordan at the Metals Agency? Thanks for coming back, man. Appreciate you.
You're welcome, man. You're welcome. It was good to briefly see you in Vegas and say hello.
Yeah. I had a guy that I've done a lot of business with over the years who sells equipment. I ran it. He called me the other day. He goes, "Hey, man, I know we should have we should have been sat down and carved out some time to get a beer." And I just said, "Hey, every time I ran into you, you were talking to somebody and you were busy." And I said, "I hope that translated into some business for you."
Yeah,
And
yeah,
he goes, "Oh yeah, it was a great show. It's a great show." And I said, "Well then, good." I said, "We can get a beer anytime, but there's only a window of time when you can sell equipment like
yep,
that." I said, "Go do your thing." I said,
yep,
"If you make
mhm,
some money, it's going to make it a lot easier for us to get a beer,
yep.
down the road." So I'm hopeful that it was that way for you as well.
Yeah, no, it was definitely very productive. It's good to see new clients, prospective clients, and we're sharing that we're expanding our footprint to South America with new business out of Chile, and yeah, we have a lot of new projects in the pipeline that we're very excited about.
I love it, man. You guys are growing. I just
Yes,
was telling we were just talking earlier. I love the fact that of what you're building, and it's not easy. There's a lot of work going on behind the scenes, a lot of conversations, but a lot of excitement, right? That you're in that phase where you hopefully you every dollar you put back in to your business, maybe you get out too if you execute right. And but it's fun to be in that phase of your business when you're growing and you're trying new things and you're opening new markets. And so it's not easy, but I think it's gonna be worth it.
yeah, we're very excited. So we pick a good day for copper, man.
Yeah, dude, I only have you on up days. I was just telling you how ignorant I am sometimes, but why I would be probably a terrible trader for a living. Like, luckily, I know how to operate a scrapyard, but um, every time I think I got a good sale off, the market comes back to remind me that I'm not a good trader.
Well, there's always the fear of missing out, but we can certainly go in the other direction very easily. So
Yeah. So I mean, you sent me a note the other day, client note, and I want to just briefly touch on it. And you were just telling me something you posted on LinkedIn, and we'll dive into that. But essentially, in the client note, you were talking about how the Comex warehouse has actually been being resupplied. Like it's not at a structural deficit like it kind of once was, right? And so these moves in the market are interesting to say the least because it's not that they're I mean, I know you also note in that client note that it's very trade driven, right? Just like we have discussed in the past. So I'm super curious to your thoughts on this. Whatever you're willing to share, whatever you can share, your insight is what is driving this thing back to 630 where it's at today?
Well, let me give you 3 points of data just on the warehouses alone. In January 2025, the level of Comex Cato in the Comex warehouse was about 85,000 metric tons. Okay. By the end of that year was 430,000 metric tons. Okay.
Yeah.
So January 2026, we started with about 430,000 metric tons, and today we're reaching about 600,000 metric tons of Cato in the warehouses. So just to give you an idea, that's roughly 5 times what we would usually need on a yearly basis in the US. Okay. So the reason for that is we imported all this cattle from everywhere because we thought that we were going to get 50% tariffs last year, but the trend continues, and that should have been sending a spot Comex pricing down instead of up, but we're seeing the completely reverse, right?
Yeah.
And quite frankly, I think that is all financial speculation that continues to drive the market up. What I just posted on LinkedIn today was we have 483 trading days on both Comex and S&P 500. Comex, we had 41 days of up market, 41 days of down market, and 1 day that is essentially flat. S&P 500, 44 days of up market, 39 days of down market, almost the same. So, the correlation is there that now Comex, for us physical traders, is more attached to something that relates to financial markets, and quite frankly that is going to continue to be a pretty huge issue for people that take physical possession of copper.
So, from your perspective, I mean, I'm gonna say this just from layman's terms for guys like me, you're feeling like the run up is that not necessarily demand driven on the Comex side. It's more just this the speculators are driving this market. So when the drop comes, this is now these are my words, not yours, but when the drop comes, it could be a big one and it could be quick, right? I mean, just because as soon as people wake up and realize, oh shit, there's a lot more material out there available than what's being projected by these run-ups in pricing. You want to make sure you have your material locked in, right? To a certain extent.
Yeah, absolutely. And to exemplify that, there is a number that I really like. For the year, or average Comex pricing has been 583. Okay.
Yeah.
So at 620 today, right, we're almost 10% up from that average, right? The reason I like to look at the average is because it gives you a more of a long-term kind of view of where the actual demand is. And quite frankly, the demand is not being triggered because clearly the warehouses are being stacked full of cattle that is not being pulled out. So it's solely based on the financial, paper trading that is taking place. But to your point, if at some point the demand doesn't trigger a run up on warehousing levels, I mean, this thing can go south, and it can be very painful for those that have, the physical metal and the paper trade.
Yeah. The old was it escalator up and the elevator down, right? Like chunk, 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 boom. Like if you and so I guess what that tells me what I is you actually give me maybe a little bit of that I feel okay that I keep pricing and then the next week because I was telling you I priced a load, at 618. And I was like, man, and then the market went down. I felt like I crushed it. And then this morning I saw the price at 6:30. I'm like, well, shit, man. So I'm like, I might as well get price that one. So I all I'm doing, and I'm telling, I tell you my trades just for people to understand, like I'm fighting the same battle you are. Like I don't know where this thing is going. I'm not hitting the top of the market every time. Shit, I'm not hit it any time. Like, but I'm just selling into it because, like you said, I don't trust it, right? Like I'm happy that it's where it's at, but it's not like I just did this same podcast with Michael Anderson from Shupan. We were talking about aluminum. Aluminum has very structural issues, challenges that the copper market doesn't necessarily have right now, right? It's facing different challenges. Copper is very paper trade driven, it feels like, compared to aluminum right now. Aluminum, I feel like that is demand that could stay. Copper definitely feels like it's it's on a wild ride and it's a rocket ship, but at some point, if that thing runs out of gas or fuel, that thing's going to drop like a rock in the sky.
Yeah, I mean, when you think that your average has been only 583, right? I mean, pricing at six, I priced several lots of copper yesterday at 616 market. It's a good price, right? I mean, the average is only 583.
Yeah.
Certainly, we all would like to hit that peak of the number, but if you just literally split it on trading days, you only have at any given day 50% chance of hitting that up number. I mean,
Yeah.
it's a split right down the middle.
Well, especially like if you're moving big volume, I mean, I think that it definitely makes sense. If you're a guy that moves a load a month or whatever, I encourage you to be smart in what you're doing. But also, I mean, you probably can maybe take a little bit of a risk if you want and see where this thing goes. But you better be ready to pull the trigger because everybody wants to buy in an up market. At least it feels like there's a lot more buyers. But in a down market, when that thing does roll over, and it will, I promise you, like don't take my word for it. Take somebody's word for it. Somebody else's that does it all day, every day. It's gonna roll over, and when it does, the buyers disappear, or their spreads get so wide
Mhm.
that it's they're hard to find. It's hard to get a good price, right? Because now all of a sudden everybody's playing defense. Right now it feels like everybody's kind of playing offense. Everybody's aggressive. They want to buy. Maybe the spreads are widening a little bit, but they're still decent. But when the thing does roll over, the spreads widen out, the price comes down, the buyers disappear because everybody now is they don't want to catch a falling knife. So just be aware of that, on your trades.
Yeah, yeah. I mean, to your point, everybody comes out of the woodworks. We all know them by name, right? They
Yeah.
have a warehouse chock full of copper, and they love to call when they see this enthusiasm in the market. Um, from the consumer standpoint, they're being very cautious about this, right? Most people are still trying to figure out how to price basis LME, which tends to be a bit more stable, but that also is going to bring a different dynamic that if we continue to have this arbitrage between COMEX and LME, the premium to bring more cotton into the US is going to be more sizable for traders looking to do that.
So the
Um,
arbitrage today, I was like 610, 611,
mhm,
right?
yeah,
Versus say 630. So you're about a 20-ish cents.
yeah,
Yeah.
yeah. I mean, $400 a metric ton, call it. It starts getting into the range where they like to tinker with the idea, right?
Yeah.
Because they also get a premium for cattle over comics in the U.S. as well. That can be 8-10 cents a pound. So now you're talking about $600 a metric ton. It starts adding up pretty quickly with all the risk and everything that involves and all the financing and everything. But if that continues, it's just going to put more cattle into the U.S.
Yeah. Yeah. Which then provides that like structural buffer that allows them to take the price down because they're comfortable that they have enough material in the warehouse. And you could see, the traders change on a dime. I mean, you saw what happened to silver, right? I mean, it's no different. All of a sudden, that material floods in, and the trade that seems like it's never going to stop does not only stops, but it can it can turn pretty quickly. And I mean, it's not unprecedented. I mean, it wasn't that long ago, a few months ago, that we saw what 658 or 660 copper, right? So I mean,
January 29, I think, and then the two consecutive trading days, we lost all the games in two consecutive trading days as well.
yeah,
But
which is that's where I'm going, right? So like we did get to that 659, 660, whatever that number is, but it didn't take long to wipe that thing right off the map. So I'm what are you looking at? So let's get to like guys that are that they're running the their yards, like a number one copper, a number two copper. How have those spreads, have they been adjusting I mean, have the spreads been widening? Are those spreads stayed fairly tight with it, as this market climbs? Are they tracking, are they not tracking? What are you seeing out
it's
there?
it's a mixture. I think that some guys in the domestic places started tracking that and widening a bit, right? Not 10%, but we definitely saw some widening of discounts or spreads. Uh, I think that the export guys, because they're more based on LME, are not as trigger happy as the domestic market.
Hmm.
Uh, so I think that there's a big delta right now between LME pricing and COMEX pricing. Uh, and you know, I think that last week we were able to place very bright, 9 to 12 under July COMEX. That price I don't think is there today.
Yeah. And that's delivered to export, right? Where to
Deliver the dock or domestic mill kind of deal for prompt shipment, May June shipment,
gotcha.
full loads kind of pricing. That's
Yeah,
to put it
yeah.
in perspective, right?
Yeah,
Uh,
bigger volume. So
yeah,
like
big
what about
volume.
on say like a number one copper, number two copper? What's the general range that somebody should, be able to expect the discount to be that's a domestic shipper?
I think that the number two is probably going to open in the domestic side, probably between 40 and 45, 48 under at a
Hmm.
620 market. And just basing on historical
Yeah.
kind of spreads, right? I think that that's where probably most of the deals will fall if this maintains.
Yeah.
Uh, I was looking at my notes from our last conversation. We were talking that $6 market was not finding support, and here we are at 620 for a day, nonetheless, but still
Yeah.
for a day. But yeah, I mean, our average is only 583. I mean, it's huge ramp up.
Interesting, interesting. So you're thinking like that 45 to 50 number for a number two, right?
30 to 35 under for number one.
Number one. So
Um, I think that 15 to 20 under for Bear Bright on these levels if we were to hold up in here. Yeah,
yeah, interesting.
yeah.
Well, at the end of the day, I mean, that still, it still puts you at pretty aggressive pricing. I was looking at our purchase reports the other day and I was talking to our accountant and they're like, man, we're spending a lot of money, right? And I was like, we're spending a lot of money, but I don't know that our volume is really gone up, right? It's just the price of aluminum, the price of copper, on the non-ferrous side, it's, the pricing of everything is really what's driving your top line, and especially on the the buy side, where you feel like you're like, man, the amount of money we spent, you should be really crushing it, right? And but at the end of the day, it's that's what it's costing you to run your business today. If you're buying copper, you keep that stuff moved because you can get cash flow constrained really quickly.
Yeah, and just it's so funny you're mentioning this. Um, this brings a very interesting issue for a lot of trading houses, right? If you take $250,000 lot of copper, the cost of capital today, put it at 8% because bank is going to give you somewhere in there, right?
Yeah.
If you have to finance that loan for the entire year, 365 days, that's $20,000 of carrying costs on interest alone, right?
Yeah.
That equals to about $55 of financing per day, right? So just to have that investment of the money in the warehouse per day, you're spending about $60. So a lot of trading guys are looking at this and saying, oh my God, I got to put $250,000 into this, wait for 60-day payments. It's going to cost me $1,200 to do all these. All of that gets built into the spread, right?
Yeah. And if you then in turn, let's say if the S&P has been averaging 8% returns, like this is just for rough math purposes, right? On an annualized basis, if you take that 25,000 or whatever that was going to cost you to finance it and you put the 8% back in your pocket, it's actually like a $50,000 delta on the interest, right?
Yeah.
Roughly per load, like on one load, right? And so all those factors have to be taken into consideration. Now, if you were buying it at $5 copper or whatever, and you got, and you hit a lick on it, like, and you were, and it only cost you 25 grand to finance it, but you made $1 a pound, well, then, you're probably doing okay.
Yeah, and but we only hit a few of those through our career, right? And then they prove temporary and very short fleeing.
Yes.
But that's a big issue for smaller yards, right? I mean, because cash is not sometimes it's restricted to a line of credit or cash flow or receivables and all of that. And for big trading guys, I mean, now this is becoming a real issue. Even if they have the credit lines, they might not be able to do as many lots as they would like.
So structurally, in your opinion, Aldo, I had brought this up to Michael earlier as well on the aluminum side, and we're like, how much? Because everybody you hear is AI this and AI that, and there's definitely some, that's definitely playing the AI demand driven economy that we've been operating in. I mean, you talk about the S&P and the Nasdaq and those and the Mag 7 and how much of those the value of some of these companies is being driven by whether it's behind the structure of supporting the AI or the potential of the value that AI brings their business, whatever. But on the straight up just scrap guy commodity side, like what we're seeing is how much of the copper pricing and the forward future copper pricing is being driven by what people are perceiving as, this AI build out that could go on for who knows how long, right? Until the banks stop loaning money against it. I feels like that's the going to be the key driver. But as long as the data centers are being built out, as long as the amount of electricity that's going to be required to run these facilities, how much of that is driving this copper momentum, in your opinion?
In my opinion, I think that a very large part of that is that. We saw it when everybody got very enthusiastic about EV cars, remember?
Yeah.
And we thought that was the big driver. And then, I remember talking at the round tables in Chicago and making a presentation that, prove accurately, sometimes it does, that the subsidy could go away, right? How long were we able to sustain $7,500 for everybody that wanted a car? That went away, so that demand really came off. But now I think that there is a lot of speculation about these data centers. And a couple of things to take in mind about this, right? These are huge projects that demand a lot of copper, not only for the data center, but the infrastructure outside the building, right? There's no denying about that part. But globally speaking, the cost of the rate of electricity per kilowatt hour in the United States is one of the highest around the globe. Okay.
Mm-hmm.
And yes, if you're in California, you're paying the extreme. If you're somewhere in the southeast region of the United States, you're paying on the lowest side. But overall, we're still one of the highest around the globe. So these data centers, given that their cost of utility is the kilowatt hour, a lot of these projects are going to set up footprints in the United States, but a lot of them are not going to get built in the United States, right?
Yeah.
Nobody in their right mind is going to put a data center in California because they will go broke, right? I mean, that's as simple as that. And quite frankly, we're already starting to see a big pushback from communities on these data center buildups, right? There's real questions that are taking place from an environmental community standpoint. So a lot of projects, yes, they have huge demands, but I think that we're placing an enormous amount of future demand that is not realized yet on this market. That's just my opinion as it comes to data centers and AI.
A lot of hopium, right? A lot of, like projecting forward, a lot of hopium out there. And so I tend to agree to a certain extent. Like, I tend to agree that if we can't figure out a way to make this a net positive for the average Joe, then the more people, more communities, more average Joes are going to keep frowning upon these build outs. And if that happens, if only one out of every two gets built was projected, that's a big chunk of this forward driven demand that people are projecting that's not going to be there, right? So they're either going to have to figure out how to get people to align behind it. Because I was just watching a video the other day. They're talking about putting the biggest data center in the United States over here in Utah, right? Um, and the amount of people in this planning and zoning whatever meeting that were rallying against this project was crazy, right? And so if you can't get the people behind it, and not everybody's going to agree with any big infrastructure build. They want it done, they just don't want it done in their backyard. But I get that. But if you start canceling these projects because the community doesn't want it or they can't figure out how to get it passed, I could definitely see some very big like potential demand that's driving these prices come off the board. And that has got to have at least some sort of mental effect on these traders where they're like, okay, maybe there's not going to be as much demand as we once thought. And you could see that could be something that's going to push these copper prices back to reality. But as long as that AI build out, the structural demand is out there, I feel like that copper narrative, the copper potential pricing, it's still got some room. Um,
Yeah,
like you said, I mean that could last a day, a month, a year.
it
We'll,
does, right? But traders has a mentality, right? They get very into this herd mentality as well, right? It happens with Bitcoin. It happens with a bunch of different stuff, right? And you even see it with the level of speculation that we're now dangling with is quite frankly starting to go into very unsophisticated platforms, right? You and I have shared notes about how hard it is to get teenagers to do their homework and do all the chores, and now all of a sudden my teenager talks to me that you can put $10 into predictive markets apps about the price of copper, and my head starts exploding, right? Because now I got a teenager that thinks that because he was asking me, what do you think that copper is going to do? And I'm like, you never asked me that question. Why in the heck are you asking me that question? He's not interested about what I did. I had that hope there fleetingly there for 3 seconds, but he wants to figure out how these cash eating apps, and it's pure speculation, right?
yeah,
And it's very hard at some point to distinguish true demand from all that noise, right?
yes,
The largest 7 tech companies in the S&P 500 now move about 40% of the S&P 500 as a group, right? And
yeah,
it's all in these trillions of dollars worth of investment that they're doing in AI, and data centers is part of that, and copper is part of that. So how much of that is, I think, is a lot, and we have to be kind of very, very cognizant that at any given time, also those have the potential for the hot air to come out of it rather quickly as well.
So the thesis I get from this month's conversation is enjoy the ride. Take it while you can get it, but know that every good Six Flags, every good theme park ride eventually comes back to a stop. They unload some passengers and they reload again, right? So don't get used to it. But take advantage of it while you can. Understand where the actual supply is, and it's definitely considerably higher than it once was, and know that that's going to at some point have a factor in these traders' consciousness about where they are positioned, right? So,
and like Warren Buffett said one time, right? He will tell people that he wasn't a very smart investor, but what he did was stick with the fundamentals for a long period of time, right?
yeah.
He's, in the face of it sounds so simple, right? I mean, stick to fundamentals for a long period of time. How difficult can that be? Well, it's very difficult, right? And for traders, sometimes we place a very emotional component to the fear of missing out, the big price markup, right?
Yeah.
All of that comes at a cost too, right? One is your time, two is, how much do you want to dwell on it? And three is that you're actually putting real money behind the decision to go either way, right?
Yeah.
But at the end of the day, we have some fundamentals that are being obscured more and more, and we have to just be very cognizant that that's what they are, and that's the place that we live. COMEX is not going to change tomorrow, and they're going to continue to allow these financial trading homes to trade because we need them for liquidity. But now they're about 70+% of the trading. And we have to be, if we understand that part, then we can be very cognizant that it can go the other way relatively quickly.
I tell everybody, if somebody's offering you 32% annual return on your money, run because it's a scam at some point or another, right? And and if your 16-year-old or 15-year-old is betting on Kalshi the price of copper, then we might be in a bubble. We might be in one of those like where we have to at least pay attention, because the reality of it is in the scrap business, we're betting with real money. This isn't a $10 Kalshi bet. Like, we're betting with real money. Be smart. I tell people my trades because I want people to know, like, I don't hit the top. Like, I'm trying to be very honest about the trades I'm making, because I want people to know, like, I'm guessing like you are. I'm selling into it if I feel like it's strong, positive at the time. I'm just trying to take advantage of what's in front of me, knowing that, yeah, tomorrow it could be 650 or Monday, and I'll fight that battle when we get there. But for now, be happy with that you're on. Enjoy the ride. Be happy with where it's at. Don't be afraid to place the material. Know what it costs you to carry it month to month, year to year, and go run your business. Be smart out there. So that's what I want to keep you.
I'm going to add one item. I get a lot of text messages the last couple of weeks about what do I do to try to spread out my risk a little bit. And I use two instruments outside of hedging that prove to be actually pretty basic and fundamental. One is that I have some sales on monthly average. I don't put all my positions in there, but certainly some. It helps me kind of buffer for some people that we do their trading for their monthly buy. So it flows with the average. And the other thing is that we ask sometimes to be able to hedge, where it doesn't have to be the entire load. We can hedge half a load or even a quarter of a load. So we part the nut a little bit into smaller pieces to try to kind of feed it out as we see the market changing. So not very sophisticated, but they work. And it helps protect, especially for smaller jars. Some of that flexibility can be very, very good for them.
Experience, man. Experience wins. So if people want to get a hold of you, Aldo, if they got these questions for you, if they're interested in having you help them out in this market, whether it's partial hedging or selling material for them, what is the best way to get a hold of you, sir?
Either by email, aldo@themetalsagency.com, or directly to my cell phone, 510-219-0307. You know that we're still a very nimble, small company when we give our direct phone number away. So
Absolutely, man. Absolutely. And that's why I say I did this podcast for the guys that are like myself, small, medium-sized yards. They're just trying to navigate through this craziness, right? So if you need help, if you have questions, by all means, reach out to me, reach out to Aldo, and you have a lot of resources available to you. So you use them, like use your resources.
Absolutely. And I can tell you that every time we do the podcast, I get 2 or 3 text messages the next couple of days, and people want to talk or have a question. And we're always willing to engage in a conversation. Not everything has to be led to business, and we enjoy it. And part of it is the networking, and we don't mind sharing, all the stupid decisions that we have made on our trading days as well, because there are a ton of them. And if somebody can learn a little bit from them, we're happy to share.
Exactly. We all make each other better, right? We all sharpen each other's knives. So ask the question. Don't be afraid to reach out to Aldo, see if there's an opportunity for him to help you out. His business is growing for a reason, right? It's growing because people trust him to do business. So reach out. We'll talk soon. And thank you again, Aldo, for carving out the time.
Sure,
Next
man.
month, we'll see where we're at. I'm not even going to ask you to predict because you just be throwing darts at a dartboard at this point. All
Thank
right,
you.
take
Thank
care.
you for giving me a pass.
Absolutely. Absolutely.